Hi there, welcome to Grain TV. It's Tuesday, March 15th. We had a down day in grains. Let's take a look at the Grain Edge trading platform and see where we closed. In Chicago, corn was fractionally lower, losing 1/4 cent a bushel, while beans was off 3 1/4, but managed to close better than where it was trading earlier in the day with a 7-cent loss, and wheat closing with a 1 3/4 cent loss. News today was somewhat focused on issues in Brazil. Let's first talk about new crop forecast estimates from private analyst Abivio, which saw the soybean crop there in Brazil coming in at 99.7 million metric tons. That is higher than their previous estimate of 98.5, but still at 99.7, that's fractionally lower than the USDA's 100 million metric ton estimate. Other news, Brazil's embattled former President da Silva took a cabinet deal with current president to try and skirt the issues he's been having with corruption. And so that sent the Brazilian real down 3% after we've been on a upscale swing of about 8% in the last 2 weeks. So, Brazil's government has been very beleaguered, and people are looking for a new regime to take over that economy. There was thoughts that with this corruption scandal breaking with da Silva that we might see that. The Brazilian stock market rallied on that news. The Brazilian real rallied on that news. But now with this news that da Silva is maybe going to elude any sort of corruption conviction or corruption charges, that sent the Brazilian real down 3%. Other news today, crude oil was off yet again yesterday, losing $1 a barrel. Today off 80 cents a barrel after talks that were scheduled to be held between Saudi Arabia and Russia and other major players to potentially curb production. Those talks were supposed to be held March 20th, have now been postponed to April because some countries are saying they are not coming to the table. So that sent the crude market lower as well, which pressured soybean oil and beans. Speaking of soybeans, let's take a look at the day's NOPA crush numbers that come out once a month in the middle of the month. This is the numbers based on February's crush from NOPA facilities that were crushing beans. The number came in substantially better than what everyone thought. Analysts were looking for 139.9 million bushels on the month. We came in at 146.1 million bushels, even above the high end of analyst expectations, which was 144. Unfortunately, the soybean market didn't really shoot higher on that news. It did blip higher for about 10 to 15 minutes, but sold off with a 7-cent loss after the news, eventually closing with only a 3-cent loss, mostly in the face of lower crude oil prices. Let's take a look at this soybean crush number in comparison to where we've been historically. Now, what's intriguing about this is that we were able to find a crush number that was better than the high end of analyst expectation. That's a pretty rare event. In fact, you have to go all the way back 11 months ago to the last time that the NOPA crush number exceeded the high end of analyst expectations. It only happens about 10% of the time. So that may not be enough to ignite this soybean market, but it may be enough to at least bolster some enthusiasm for the shorts to cover their positions, because that is a fairly bullish number. Let's switch gears and talk about wheat, where a lot of the news has been focused on the dry weather conditions in the Central Plains. And as we look at the drought monitor from University of Nebraska, based on last week's reading, we can see the Central Plains stretching from North Dakota down into Texas, where predominantly that's hard red winter wheat country, and especially in the southern states of Texas, Oklahoma, and Kansas. That is the real breadbasket of hard red winter wheat country. And we can see some yellow indicating some very dry conditions that we are in that situation today. Now, let's look ahead with the courtesy of MDA Weather Services forecast for the coming 3 months. And this is where we're really going to start to get into the growing season. Right now, it's still a little premature to really get worried about the wheat crop. But when we start to turn the calendar into April, and certainly late April, early May, we're going to need to see some precipitation start to materialize. And when we look at MDA's weather forecast, we don't see much hope for any sort of turnaround in the dry conditions, especially focus on the bottom sections of these maps. These are the precipitation, and where you see yellow and a big B, that indicates a probability of below normal precipitation. In April, you can see Texas and parts of southern Oklahoma are likely to experience below normal precipitation. And when we get into May, even more critical that we see weather, we can see that below normal precipitation expand to really the main part of the hard red winter wheat growing country. So that's problematic. You know, we have seen the wheat price start to rally here. We talked about July Kansas City wheat getting above 480 and that being a positive sign, and we in fact broke that overhead resistance and have been moving higher as a result. And right now we are coming up to that critical $5 mark on July Kansas City wheat. In fact, today we knocked on that door 3 different times, unable to clear it, but I think there's enough underlying support here. We've got, first of all, the dry weather that is current and on the minds of traders, but you also have a significant reduction in crop acres for winter wheat, so that's problematic as well. And then finally, we've got the wheat traders, the hedge funds, in wheat that are very, very short. So I think all these factors combined are setting the stage for more improvement in the wheat price. Yes, we have big stocks in the world market, but a lot of those stocks are poor quality wheat. When we look at hard red winter wheat, that's a premium quality wheat. It's going to be in demand from countries like India, which are having a short crop this year. And so I wouldn't be surprised to see this hard red winter wheat market really get some more enthusiasm, break out of this $5 testing ground that we're at right now and potentially start to inch higher on news of continued dryness in the plains. That's all we got for today. As always, if you have any questions, visit us online at grainhedge.com and take a free demo of our futures trading platform and see how we can help you in your own marketing needs. Silver right now is at historically low levels. Starting with the financial crisis of '08, silver prices made an epic run from $10 an ounce to $50 an ounce in just 3 years. Silver looks poised to make another run higher. Here's why. Today's headlines show wide-scale economic risk, central banks using negative interest rates to stimulate economic growth, and the continued explosion of government debt around the world. All these factors are creating a flight to safety in physical metals. On the fundamental side, high mining costs limits new silver supplies, while demand for silver continues to expand through rapid use in cell phones, plasma TVs, and batteries. All these factors suggest taking action at today's prices before silver reaches $25 an ounce. Our precious metals desk at GrainHedge can educate you about investing in physical metals. Their goal is to put the most amount of silver and gold in your hands at the least cost. To get started, contact Rodney at grainhedge.com or by phone at 877-472-4607.